You've made the cash in the current year, use the current year's cash to pay the tax. You still get people in business going, nope, it's the IRD. They're bad. I'll pay them at the last possible moment that I can. They don't deserve a cent any more than they deserve.
In the mortgage space, there's a saying, and they say like, no one, ever regrets paying down debt. But with tax debt, we're like, okay, they're giving me a deadline that's in the future. I'll show them. Like you're already in debt to them because you've made the money in that period, and they're just giving you a runway to find the time to pay it. If people can't pay it, mate, what do you think they need to be thinking about? Like, what options do they have?
The number one solution would have to be tax pooling.
The IRD Easter Bunny is coming to take your eggs off you on the 7th of April because terminal tax from the 2025 financial year is to be paid.
People are going to be listening or even indeed watching to this, Luke, and thinking, what on earth are you talking about? Well, we're just getting ahead because your accountant will send you a reminder on the 1st of April. No, it's not April Fool's, but it's a week before terminal tax is due, and that's typically when they send out their tax notices.
We thought we could start with what terminal tax is to start with, to give the people out there a real good accounting and tax lesson 101. But it's basically your terminal, i.e. final tax payment for a financial year. So the 2025 financial year, to jog those out there's memory, ends on the 31st of March 2025. That's the day after my birthday. So the day before, you would have sent me presents to our Grays Ave address. If you could Google that, please, that would be very much appreciated.
Bottle of Sea Rock, hey, goes down quite well. Or
cologne.
Yes.
A
scent.
Yes, a scent. It would be fantastic.
Lynx Africa?
I think I've already got that one. Yeah. So you may have paid some provisional tax towards that tax year, and that may not have been enough to clear your eventual tax bill.
It's the wash up, eh?
Yeah.
Of going, you've paid provisional tax, you haven't paid enough, you've got to pay the balance. And you haven't paid enough, and if it's a big amount, because your accountant hasn't been very good at telling you how much provisional tax to pay during the year, so the tax man comes calling and they give you another more than a year. Like March 2025, that's at the time of recording, like 11 months ago. It's just like, why we got tax outstanding for like that long ago? But, the Bank of IRD is coming calling and they want to be paid.
Yeah, we do get a fair bit of luck in business in that position where if you do have terminal tax, you can pay it, later on. And for some people that are not in business would say, well, that's unfair. I've got to pay my PAYE as I go, whereas you guys get to pay it a little bit late. So let's walk people through an example. Let's say in the 2024 financial year that you had a tax bill of, let's say, $20,000, right? And so then to keep it simple, the following financial year, so into your 2025 financial year, the IRD are going to say, well, we want you to pay us $7,000 in August, $7,000 in January, and then $7,000 in May.
So those are your provisional installments for the 2025 year based on what you did in 2024.
Yeah. And so you're going to make more than that, and you're going to end up with a bigger tax bill, but your accountant's going to forget to tell you that. However, the reason you're making more is because you've been a good student of the Next Advisory podcast, and you've been learning things like reaching out to people, doing more volume, reaching out to past customers, increasing my margin.
Listen to the previous podcasts, and I've gone and solved some more fucking shit.
Yes, hopefully. So you've ended up actually with a $28,000 tax bill. Now, your accountant is going to do your accounts and say, oh, well done, you paid $21,000 of tax, but you've actually got a $28,000 bill. Therefore, we've got $7,000 that you haven't paid.
One minus the other. Your actual tax was 28. You've only paid 21. The IRD wants the 7.
Yeah, and they want it on the 7th of April, 2026. So you've actually had all of that time where you've made the profit, made that money, but you haven't actually had to pay that difference.
Yeah.
Now, just to flag as well, once you start earning over around $60,000 worth of tax, just to keep it simple for people out there, you have a different set of rules, and you really want to probably understand this to a lot more detail than this. But that's a very small percentage of taxpayers, so we don't want to, try and confuse everyone that's not there yet.
And I think just to add a bit more to it, people listening or watching this would listen to this and go, oh, $7,000 is not that much. We're illustrating a point, and we've seen businesses out there that have had bills in the tens of thousands of dollars, where in that exact case, the tax bill was $100,000, for example. They've only paid $40,000 of provisional tax. The accountant says the tax return and goes, "You've got $60,000 tax to pay. Thanks for doing getting your accounts done by us. Here's your bill to pay us." And the business owner's got to go, "I've got to come up with 60 grand. And it's due on the 7th of April. And like you said, there's those different, more complexity to it by the time you're starting to think about interest. But meanwhile, the business owner's going there, "I've got an accountant's bill to pay of probably a few $1,000s plus a tax bill that they've just told me about. Thanks, mate. Wish I'd known about that 6 months earlier."
Yeah, and it's a good point that 7 grand maybe is not that much money, but this is what we always see with business owners. They go, "Oh, my terminal tax," if they do have it, they go, "I know that the idea are going to give me nearly a year to pay that difference, stuff them, I'll wait till then." But this time of year comes around every year, and I'm always blown away how many people still haven't cleared that terminal tax, and they are going to pay it on that last date because we can make some interest on the money that we have, for instance. But the number that they get there and go, "Shit, I actually don't have it anymore. What are my options?"
I think there's a psychological piece as well for business owners of just like, "Fuck you, it's the IRD." Like, pardon my French, you still get people in business going, "Nope, it's the IRD. They're bad. I'll pay them at the last possible moment that I can. They don't deserve a cent any more than they deserve. And if whatever they deserve, they will get it on their last date."
Yeah.
And it's just like, yeah, okay, cool. But actually, if you just paid it sooner and got it out of the way, you don't have to worry about it. 7th of April come and go. You will never notice, and you just carry on going out selling more fucking shit.
Well, on that, I actually was working with a client recently, and I said to them, this is early February, I said, "I want you to pay that terminal tax today." Because I said, I feel, I've got a good relationship with them. I'm like, I feel that you're using that as a buffer in your mind. I'm like, I want you to give that to them so it's gone, and then it's going to force you to get a bit hungrier in the sales department.
Nice.
And I'm like, that's something that you can do today that I think from the next day, you're going to have to push a bit harder because you're going to log into Xero on internet banking and you're not going to see that level of money sitting there and go, "Oh, I've always kind of got that and I know that I can push the IRD off a little bit later if I set up an installment arrangement," and you start to get into these bad habits.
I think that the solution, if I can jump to that, would be if you're in business and you've got a rough idea as you know what your profit is that you're going to get for the year. And then we know that if we're going to make a profit of $100,000 multiplied by the company tax rate of 28%, it's $28,000 of tax. We can then go, okay, every month I will put into a separate tax account, whatever 1/12 of that is, a couple of $1,000s. So by the time we get to 12 months later, we have $24,000. And you're diligently doing that every single month. Then when provisional tax comes along in August, you take the money out of that account, put it to IRD. Keep going with those monthly top-ups into that account based on that target profit, so that by the time you get to the end of the year, there will be a small wash-up. And in that example, might be a couple of grand. You could have overestimated, you could have underestimated, but at least you've been diligent about what's actually happening in your business in the current year rather than based on something that's happened in the prior year and either risk underpaying, or the worst case on the other side is overpaying and the client's paying tax to the IRD based on, man, this huge big super profit because they've had this great year, and then all of a sudden something's changed, they're not doing as much work, but you're still paying tax because your accountant said you've had this great year. And it's just like, I don't have the money. And the stress and drama that creates for a business owner, important, base it on the current year, create an income tax account with your bank, and put it in there diligently. Then you won't end up in this position. Are you thinking about buying a business or maybe getting yours valued? At Next Advisory, we help you figure out what a business is really worth and guide you through a business purchase with confidence. Before you buy, visit nextadvisory.nz and book a time to have a chat with me.
Well, a slight tangent, but I'd love to know what the amount of terminal tax is that is supposed to be paid on the 7th of April, to then compare it to what does end up getting paid, to then see what becomes owed to the IRD, to go on to those magical statistics by the 30 June quarter of what is owed to the IRD and hasn't been paid. Because I think that as soon as we go past this terminal tax date, there's going to be some people that can't pay their tax debt, and the IRD are going to be in further debt again, which is already creeping towards $10 billion.
Yeah, you're bang on there, because I reckon in March 2025 and over the 6 or 8 months that accountants were doing tax returns, and we've still seen some business owners in recent months still not have their accounts done in March, well, late February, March 2026, and then they're only going to have a matter of weeks before they got tax to pay. But if they'd known about that sooner, they would have been able to plan. And it's just, but I think that they'd go, oh, I've got this tax to pay, and they go, you know what? I'm not that confident about what's going on. This is back in, say, June. They got their accounts done June last year, 2025. So March, April, May, June. The accountant's done it within 4 months. Great accountant. And they've got a tax bill. And they're like, oh, I'm not that optimistic about what's going to happen, so I will pay it in April. And then 2025 wasn't as good as what everybody thought. We get into 2026, and it's just like, oh yeah, this could go one way or the other. And their accountant's not going to remind them until a week before it's due. And it's just like, surprise, you've got to come up with this money that you've forgotten about, that you're delayed because you weren't so confident about what was happening in the economy. Nothing much is happening because it fundamentally is going to come back. You haven't gone to the Massey University's education lecture on go out and sell some more fucking shit. And you're going to be in the same position. And that's where it's just like, oh yeah, I've forgotten about this. Despite being told by my accountant to put a diary note and plan for it, I've forgotten about it.
Yeah.
And now it's come calling, and I don't have the money because I haven't planned, because I haven't done the cash flow planning that Luke and Phil keep telling me to do.
And where this can actually happen as well is at an early stage of a business. And we see this all the time. And people probably hear out there, oh, you pay 2 years of tax in one go. And I've loosely heard something around that. And you get screwed by having to pay 2 lots at one go. But if you think about it, recently we had a client who they made, I'm just going to make up some figures, but $12,000 of profit in their 2024 financial year because they were just getting started in February and March 2024. So we do the accounts and they're, really humming like into the next financial year. But for 2024, the idea going, okay, this business made 12K and they've got, let's just say, $3,000 worth of tax to pay on it. So the IRD say, well, pay up your $3,000 and do that in April the following year. So they do that. But in the 2025 year, they do a full financial year. They're humming and they make 120K profit. Now, very loosely, let's just say that a third of that is tax, so $40,000. So the accounts are done and, oh, hey, heads up, you've got to pay 40K of tax. But you don't have to pay it until April 2026. And this is something that we often see where it's not a $7,000 and a small amount, it's a, I'm definitely not going to give the ID that 40K. I'm going to hold on to that and I'm going to do something with it. And don't worry, but by April, I'll have it back in there and I'll be able to pay it. But if you think about it, even for some of the businesses that have been trading longer, how many people said in maybe that final quarter of 2025, like, shit, it was slow, or even the middle there. And I reckon some of them would have lent on some of that tax that they had there to get them through. And that's where I think the IRD might find that some people can't actually pay their terminal tax in April 2026.
Yeah, and it kind of pains me because we go on about it so often, but I think there's an obligation as a business owner that you've got to pay your PAYE on behalf of your employees, you've got to pay your GST, and you've got to plan for income tax. And I get that it's tough to let go of the cash, but it's so much easier when you do create that separate income tax account and you put the money aside diligently. Otherwise, if it's just in the bank account, it's just going to get washed away. You're going to see the money there and go, oh, I'll go and spend it on something. Because tax is not front of mind as a business owner when they're going out spending stuff.
Yeah.
But if you're diligently putting money aside, it's going to make it so much easier that you won't be getting into this situation that when you do get your tax return from your accountant and it does have a bill on it, that you're just like, I'm prepared for this. It's actually okay. I'm not stressed about it. I can actually carry on and focus on the things that matter. Because when you get that bill from your accountant and you haven't planned for it, it's going to mess with your bandwidth. It's going to mess with your energy. It's going to put you on the back foot, and then you're going to be making different decisions in your business because you're then going to be, damn, the tax man.
A couple of clients that we work with where they have had terminal tax, they go, okay, well, I'm going to work backwards from April to whatever month it is. Okay, that's 7 months away. I've got $14,000. You know what? I'll pay automatic payment of $2,000 a month that's going out so that they're not having to let go of the full 14. And that's, That's how they do it, and that's how they like to do it. I think that's what everyone has to do is find their own rhythm.
Yeah.
But the surprises suck, and the lump sum payments, they suck. Like
Yeah.
those are the two things that piss people off. And recently, I was doing some work with a client, and cash is starting to get tight, and I gave them some advice, and then I thought, oh shit, I've completely forgotten about terminal tax. I'm sure they've got terminal tax to pay. And I was like, no, I know that I told them to pay it earlier because they had the cash. I might get rid of it now. And I went into the IRD to have a look. Shit, did they pay it? And they had. I'm like, oh, okay, great. Like it's actually, that's not then something that we have to factor into the next piece here, because that was just going to add even more pain for them to have to worry about. So that was done. So I think some people pay it early and get it out of the way. Some people pay it as an AP and smooth it out. Others pay it on at midnight.
On the 7th. Yeah.
No shit. Like how many times do we get a text the day before a payment of tax, and it's in the evening, and it's basically, oh, hey, mate, just want to confirm, is it income tax that I'm paying? What's the period that I'm paying against? You think, you've left this until 7 p.m. on the night before.
While you're sitting down watching Love Island.
Yeah. Mate, I've just been interrupted due to tax, so now I've got to pause my Love Island and help them out and then get back to the favourite episode.
But I'm a big fan, and I'm kind of beating the drum a little bit, but you've made the cash in the current year. Use the current year's cash to pay the tax. Don't be robbing Peter to pay Paul of going, you know what? I won't be so diligent here. I'll worry about it in the future. Like, just make the sacrifice now, clear the tax, because you'll have a much clearer head to then be able to go on and do better things.
It's funny because in the mortgage space, there's a saying, and they say, like, no one ever regrets paying down debt. They don't come back and say, like, oh, damn, like, I'm gutted I paid that down. Like, normally they're just then on to the next thing. But with tax debt, we're like, okay, they're giving me a deadline that's in the future. I'll show them. Like you're already in debt to them because you've made the money, like Phil says, in that period, and they're just giving you a runway to find the time to pay it. And it's probably a blanket rule that's allowing for large businesses and also people to collect their debtors and get on top of cash flow and just make things a little bit easier. But I think some of us that actually can turn our work into profit, into cash in the bank, we go, I still do have 9 months to pay it. I'll just wait. I'll just wait the 9 months. Hey, if people can't pay it, mate, what do you think they need to be thinking about? Like, what options do they have if they actually flat out can't pay it? And we're not, ripping on anyone who can't, so that's why we're giving you some solutions.
Number one, come and see us and let us help you run a better business.
Nice.
Hey,
Sharp.
yeah, that's good, eh?
We'll
Not
stop
bad.
that next year. Yeah.
But the number one solution would have to be tax pooling, where you've got the ability to be able to buy some time, essentially, to go and kick the can or get some more time until, I think it's about mid-June. And it's essentially an extension of where you're going, shit, I actually haven't managed the cash very well for 7th of April. I need a little bit more time. I can go to the tax pooling company. And if you don't know what tax pooling is, go and ask your accountant. There's a couple of different providers out there. They will help talk you through it, but it does give you the ability to go, I'm not in a position to come up with the cash in April. I can have until June. But if you don't need it, don't use it.
Yeah, and that's basically financing your tax, right? So they probably wouldn't explain it to you like this, but basically you're going to finance your tax to another later due date and then have to pay an interest cost to that tax pooling company. And that's a tax deductible expense, and then they're going to put a credit against your account as if you did pay on the 7th of April.
I think the other way to put it as finance is like you're getting a loan to pay your tax or putting it on the credit card until June. And if you think about tax like that, that's not cool.
Yeah, your next option, I would say, would be to actually ring the IRD, but ring them before the 7th of April. We say this to business owners all the time, where we might get inquiry about tax and not being able to stay on top of it. We're like, don't wait until you're in debt. Like, be the client or the business owner who, when I say client of the IRD, that rings the IRD before the due date, because there's a file note basically saying, oh shit, this person's proactive compared to the taxpayers who get behind, and then the IRD are like, oh, well, they've done nothing to try and look for solutions here. So we'd suggest, finalise your position, but then ring them before the due date and say, hey, I'm in this situation, what are my options? Ask them for the options, they'll probably give you some, and then at least it flags that you're trying to be proactive about it.
The Bank of IRD will give you some finance at some very competitive interest rates, so I'm told. Unsecured, we must also cover off, but that would be the bank of last resort. I think if you do go to that stage of getting into an instalment arrangement with the IRD for your terminal tax, we understand, yes, it does happen because there's a number of different circumstances that affect everybody in business, but there's an expectation from IRD that you remain current with your future tax obligations. So if you're on an instalment arrangement, let that be the lesson to go, I'm not going to get into this position again. I need to do something differently to make sure I am on top of my tax.
Finally, mate, for those business owners who are making really good profit and will do back-to-back, I think these people really need to understand, especially when you're scaling up and you get into that first year of a grunty tax bill, and then if you're going to do it the next year, where you could have a terminal tax bill in April and then a large prov tax bill in May. And even if you then go past $60,000 of total tax, then you're probably going to have to be paying more than you're expecting to, or your obligation in that May period as well. So it can be a very heavy cash crunch time for people that are earning good money but still haven't learnt how that works. So if you make a lot of money and therefore pay a lot of tax, especially over $60,000 worth of tax, or even if you're floating around 50, this is probably when you need to reach out to your accountant and say, hey, like I've heard some stuff around the $60,000 safe harbor, let's say, use the language that accountants would use and say, just let me know what I need to be thinking about either now or into the future. Anything else, mate, on the old terminal tax?
No, mate, I think that covers it off quite well. Be prepared, it's coming, folks. Your accountant's going to send you a reminder a week before, but we've told you a month before.